Nicolas Mackel joins us. He is the CEO of Luxembourg for Finance. Nicolas, thank you very much for joining us today. I want to start with the fortunes of Luxembourg because the contraction there seemed fairly strong as well, somewhere between 6 to 12% this year. What are you witnessing on the ground at this stage?
Well, the different scenarios, 6 or 12%, depend, of course, on the evolution of the sanitary aspect, the health aspect of this crisis. If the lockdown can be lifted, as we are in the process of doing gradually as from now, the situation, of course, is going to be easier to resolve than if the lockdown has to be reimposed or continues for a time. On the ground today, we have had, like nearly everywhere else, 9 weeks of lockdown. Schools have restarted over the last 2 weeks and are gradually restarting, which will then allow people to go back to work as we are doing. Some of the shops have reopened. Restaurants and bars remain closed for the time being, as do fitness centers and swimming pools. But little by little, people are going back out of their homes and back into the working life. They have been very actively working from home, especially Luxembourg is a major financial center. Thus, in the services industry, it was possible to work remotely. More than 90% of the workforce in the financial industry here in Luxembourg has been working from home, and that seems to have worked quite well indeed. And that is what also helped us come through this, for the time being, relatively well. And I insist on the word relatively.
Nicolas, those fund managers having plenty of time to think about the ramifications of Covid-19. Now, in your survey today, you have flagged up the impact of the pandemic potentially slowing the pace of globalisation. We've heard about the impact to supply chains, and we've all witnessed it, how difficult it has been to get even key products where they need to go at this point. On top of that, President Trump also firing up the rhetoric against China at this point, taking us back to the height of some of the trade war commentary. What are fund managers doing with this information if they think that supply chains will fundamentally alter in the short term?
I think it's far too early to really give you an answer to that. Obviously, what this survey and the answers to it show is that people are concerned by the reactions of governments that have raised the drawbridges, by borders re-emerging where they were not, by, of course, supply lines becoming difficult and so on. I think that really, ultimately, these reactions from governments may be understandable in the urgency of the crisis, but going forward, obviously, globalization has been a force for good, has been a positive force. It is needed for the global economy. And if we want financial services to do what it does best, i.e. support economy, support the growth, support job creation, we need to allow it to work cross-border, which is what it fundamentally always does.
Nicolas, work cross-border, but also get a decent rate of return. I read with interest that Luxembourg fund management industry is worth 4.5 trillion euros. My worry for that industry and for the global fund management industry, they're not going to be paid properly for taking risk, whether it be in alternatives, whether it be in stock markets, whether it be in bonds as well. That asset management industry is under grave threat from the low level of rates and, dare I say it, negative rates, isn't it?
Of course. I mean, we have seen low interest rates and even negative interest rates over the last couple of years. That led then to increased investments into asset classes that imply a certain level of risk, not only private equity, real estate, but really high yielding fixed income and so on. The debt that governments are accumulating and central banks will, of course, continue this, will prolong it and even exacerbate it. So this environment will not only continue, but it will be made stronger. So, but I think it's too early to really tell what the environment will be that we will meet when we get out of this tunnel. There will also be opportunities. There will be opportunities for investments in other areas. Take, for instance, sustainable finance. This, to me, will be one of the major positive opportunities coming out of this. The transition that our economies, our companies, but throughout the world will have to do in this area.
When we think about the near-term impact of all the stimulus that you just talked about there, clearly deflation is seen as the immediate sort of near-term impact, but it feels as though fund managers are increasingly talking about the longer-term threat of a return to inflation, or perhaps threat is the wrong way to think about it, because an inflationary environment could provide opportunity for fund managers. So, you know, among the fund managers that you surveyed, to what extent is this showing up as a longer-term debate, a return to inflation as a result of all the stimulus that's been flooded into European economies?
I think that's a question that certainly deserves to be dug into much more in detail. We haven't actually asked particularly the concern about inflation as such, but it's obvious. If you see how much debt governments have piled on, anybody with an inkling on the economy would know that inflation would be the normal reaction in order to try to lower this debt in the long run. Now, other more qualified people than myself would tell you that it's however also difficult in what we discussed before, a very low interest rate environment. So there are many different dimensions to this, but obviously inflation is something that everybody is looking at.
And from a practical point of view, the pandemic has brought about major lifestyle changes for a number of industries, but certainly the financial services industry, both the sell side and the buy side, investors and analysts and bankers all working from home now. How is this poised to affect the European finance industry once we have the pandemic behind us, hopefully, and Luxembourg in particular as a hub for financial services firms?
Yes, remote working is something that everybody discovered and most people actually quite liked, and many people will want to keep at least some part of it. Given how well it has worked, you have seen how the CEO of Twitter has said that his people will be able to continue to do that indefinitely. Here in Luxembourg, of course, many voices also start coming out saying, well, there are many positives in this remote work. First of all, traffic and so on, but other aspects as well. But there are also other sides you need to look. You need to look at the creativity that interaction between people brings about. You need to see how exchange between people also furthers business. So there needs to be a reflection on this that will take on board many of the different sides. In Luxembourg in particular, we are obviously a small country. Many people commute from other countries. There would, of course, be legal and tax implications if people work rather in their home country than in Luxembourg, so on. All this needs to be looked at, but I think that is the remote work part is certainly one of the things that will stay from this crisis, because many people have discovered this as a pleasant experience. I myself I'm rather one of those who would like to come back to the office. I find I can concentrate much better, and I enjoy the interaction with other people, the exchanges of ideas. I think that is also what brings you forward.
Nicolas, I think plenty of us are on your page about the benefits of going into the office. Nicolas Mackel with us, the CEO of Luxembourg for Finance.